continuing with the auto theme, normal monsoons, etc. have all helped Mahindra and Mahindra deliver a healthy performance. The UV and the tractor outlook remains robust as well. Let's talk about the quarter gone by and the outlook ahead with the management. Joining us now on the show is Mr. V.S. Parthasarathy from Mahindra and Mahindra. Needs no introduction. Mr. Parthasarathy, good having you. Thanks so much for joining in. This is Neeraj here. Good morning. Healthy performance across segments, margin picture looking healthy as well. You've started off the year on a good note. Is it possible to continue in the same vein for the rest of the year?
Good, thank you. Yes, Q1 was indeed very good from many perspectives. That Q1 was our highest company level revenue and margins for, and across all financial parameters for Q1, and also at an M&M level the highest ever revenue and profits. So it turned, and exports of auto sector doubled. That was also good. So not only in domestic but in export also we did very well. And also for FES, a new milestone, 5,000 crores top line and 1,000 crores bottom line. So that's a new milestone. So all in all, a very good quarter. You asked about the outlook. We never talk about the future, but the demand for rural is very robust. So we are continuing to look at an industry, tractor industry, which will grow. And we have increased, in fact, the industry has upped its overall year outlook, and rural demand seems very promising, and urban demand is already solid. So we see demand all around, and therefore we see a very good year for the industry, and we will take our due position in that industry.
Okay, and I'll come to that, Mr. Parthasarathy. Just a couple of quick updates on the quarter. Unless I'm wrong, overall realizations stayed flattish, maybe marginally off about a couple of percentage points. What would you want to say to that? And two, if I just look at the margins between the two segments as well, I think FES, the EBIT margins looked healthy. The passenger vehicle or the autos PBIT margin declined just a little bit, about 140 or 150 basis points if I'm not wrong. What happened here, and can that change?
Yeah, okay. First and foremost, I always urge people to look on year. For an IT industry, sequential may make sense, but given seasons in our industry, it's always year on year. So if you look year on year, my auto volume revenue increased by 22%, but profit increased 70%. And not just a 2x kind of a profit growth as opposed to revenue growth, but a 3x. Tractors grew 2x, so overall a very performance, and if anything, auto performance in profit terms was significantly outstripped the market performance. So therefore, and it is a 270 bips increase in FES and 370 bips increase in auto year on year. So very broadly a very increasing performance. So I will take that. Q4 we should come and compare with Q4 when we do, and I am sure that there is a lot of effort which has gone into cost management and leveraging growth, and therefore operating leverage. Both of them have done very well, and I hope that can be sustained during the year as well.
So could there be in the second half, Mr. Parthasarathy, some cost upticks in the automotive segment? I believe a slew of launches that is lined up in the second half. You probably will need to up your ad spends for these launches, temporary as it may be, but could there be a hiccup on the operational front in the second half for the automotive division?
Yeah. There is two parts to any launch. You're right, there will be some specific cost related to the launch, but then there are some specific revenue also which you can attribute to the launch. So, and we hope that we are there on the revenue front as much, if not better, than we are on the cost. So, and we are very confident about managing the cost, which is more an internal aspect as opposed to the revenue, which we are hoping which will outstrip the cost increase, if any.
Very interesting. I'm guessing from your answers, Mr. Parthasarathy, that you believe that the automotive division, I mean, we'll come to FES in a bit, but the automotive division the numbers, with the new launches, without the new launches, the numbers you believe will stay buoyant for the rest of the year? I know you don't give a guidance, but the tone suggests that what's happened in quarter one could well continue to happen in quarter two to quarter four as well.
Yeah, and I'm very bullish because I told at the beginning of the year that we are going into the new year with a lot of tailwinds and not too much of headwinds, and I said couple of small speed breakers, and we will watch out for them whether they do, which was around commodity prices and interest rates. But overall this, after 3 months, I do not have anything to report which says that I've seen anything substantially change. We are still in a tailwind form. There's a lot of momentum, and that momentum should augur well for the industry. And I said M&M as a part of the industry and the India Inc. will match and hopefully even better the industry growths.
Interesting you say that, Mr. Parthasarathy. A couple of thoughts really, and would want your view out here. The street at least is working with an assumption that raw material costs have gone up for the industry by and large, not just autos, but everybody with the commodity pack getting impacted because of a rise in uptick in raw material costs. You don't see that happening? And part two of my question would be, since we spoke about tailwinds, yes, monsoons by and large have been normal. MSP hikes should also aid the rural income. But in key markets, from the last time that we hear, like Gujarat, like Rajasthan, and a couple of other central Indian states, monsoons are subpar. Is that a worry?
Okay. So 3 questions. So let me take one by one. Commodity. Yes, there is a commodity price increase, and yes, it has been substantial. And what we expected the commodity increase, it was in fact a little higher than that. And that is all there in the Q1 results. So we have been able to pass on most, but not all. We have a lag to it. But the way we have looked at it is, whatever in a growing industry, whatever we can do on the gross margin is only one part of the story. What we can do in terms of leveraging cost and cost management is the other part, and that is what you see come through in Q1 results. So going forward, we think the costs are softening, so that should not be as much a worry, but our ability to manage the cost system, as I said, should stand us in good stead. So I don't see a worry from the output point of view. Yes, input costs have gone up. Okay, so that was your question 1. The second question, I didn't remember. I want you to remind me, but let me answer the monsoon question. 2 or 3 weeks back, if you had asked me, I would have said, yeah, the monsoon, I want to watch it for a little while. But since then, if you read the commentary on the monsoon, you will hear that it is dispersed now very well. That means most of India is covered, and 81% of the area has got normal monsoon. The area like northeast, where it has got lesser rain, is not intensive on irrigation. There are a couple of places where main agricultural part which are impacted, but majority of India has received normal monsoon from an agriculture point of view. So I think we are reasonably confident where we are right now, and the prediction of a normal monsoon. So I think I don't see too much of problem in that front, actually.
Well, that's really good to
hear. So
now
for your last question you had,
this was my second question. You already answered the 2 questions that I wanted to ask you. So very good to hear this confidence, Mr. Parthasarathy. My last question really today is about a conversation that we had with one of your peers, Escorts, and they mentioned that, earlier conversations with you and Escorts seem to have suggested that the industry growth could be between 8 to 12%. They have gone out and they believe that the industry growth would be higher. You alluded to that the industry has revised its growth numbers higher. You would be at the upper end of this industry range by being a leader. Do you believe that the volume growth that we've seen in quarter 1, the 3 months put together, can only grow better or can be maintained in the quarters ahead as well? If July is any indication, you're already on that path, but what will your outlook be for the rest of the year? FES.
So yeah, so overall what I would say is that there is a rural demand, and therefore the industry can maintain the momentum. And you also said that overall we, along with the industry, is looking at a little higher number. We have also revised the industry growth rates higher. Okay. Having said that, rest of it I wouldn't want to give a guidance to the street. Just say, watch my smile. Okay, thank you.
Okay, well, that's another way of expressing confidence. And Mr. Parthasathi, I do hope it works out really well. But thank you so much for taking the time out and giving us this nice, quick perspective about what the quarter was and the outlook ahead could look like.
Thank you.
Well, watch that smile is what M&M is saying, seemingly confident about what the outlook ahead could be like. It's a wrap on this leg of Indian Open, though, on the note that the markets are lying absolutely flat, but lots of activity within specific stocks. So the F&O show will take forward all of that on the other side. Thanks so much for watching this video.